Manish, pleasure speaking with you as always. But may I invite you to continue to stay on, because the next management whom we are speaking to numbers is a management you're following very, very closely, Escorts. The third quarter earnings came in line with estimates. Profits were boosted by higher other income and a one-time gain. Bharat Madan, the group CFO of Escorts, joins us on the phone line. Good morning, Bharat. It was great numbers, but what you gave in one hand, you took away with another by giving us that kind of a guidance for 10 to 12% rather than the 15% that we were all waiting for. Can you give us more color on how the quarter is shaping up?
Yeah, I think we had given a guidance for the full year earlier at 12 to 14% sort of range. But obviously we didn't expect, I think, the festive season, the way it has gone, I think with the competition. Nothing to do with Escorts. If you look at our performance, last quarter was, I think, pretty good. We've grown 34%. And we expecting the industry also to actually grow in that range, 25 to 30%, which didn't happen the last quarter. So which actually led to some correction happening now in the full year guidance. But I think we can assure you from the Escorts side, we are still going to do better than the industry numbers. I think in the growth perspective next quarter. So next quarter, we expect the industry maybe flattish or maybe 0 to 5% sort of growth may happen this time. But obviously, our strong markets are likely to do better, which is, I think, where the positive scenario really is for our company. So we expect we should be able to deliver better growth in next Q4.
So when you say better growth in Q4, Mr. Madan, 0 to 5% is what you spoke about for the industry in Q4. What could Escorts do? Because 9 months, about 26% growth in volumes. What are you looking at in Q4?
Yeah, so as you look at the first 9 months, we have done almost double of what the industry has grown. So industry growth is about 13% and we got 25%. So we expect probably the same momentum will continue in this quarter too in Q4. So maybe anywhere 10% of percent growth will be seen in Escorts.
Okay, but a 10% growth is, a big markdown compared to what you've seen in the past. Reasons for the slowdown? I mean, is it just to do with a high base or are there other, signs of demand slowing down substantially?
Well, it's purely a base effect. I think because last year we've seen the Q4 numbers had grown by 49%, so which is a very huge growth rate we saw last year. So base is already very high. And partly also because some of the festive season which we used to fall normally in March, which happened last time. So this time we shifted to April first week. So this is some retail boost which will happen in the April month. So that probably may lead to some sort of stock getting now sales getting deferred to next quarter from Q4. So that's why we expect, I think, the next 6 months should be good for the industry. In Q1 we are looking at good growth number, 10 to 15% growth should happen in the industry. So we don't think there's any reason for worry, especially in our strong market. Yes, there are pockets like in the south and western India where we are seeing some sort of stresses happening now and some competition is sitting with a good channel inventory. But in our case, the inventory levels are pretty low. It's one of the lowest level, I think, in the last 3 years which you have seen. So we don't really see a reason for worry from Escorts perspective.
Okay. Can you give us a little more color on construction volumes? They have done well in the third quarter. Are there new orders? Are they coming at higher margin? Some color of the quarter gone by and the one that we are in.
So construction continues to do well. I think in the last 9 months we have grown about 38-39% and we'll be on a guidance of 30% plus growth. But we expect, I think, Q4 again, which is the best quarter for the construction equipment sector. So we are looking at good numbers coming in this quarter too. So overall, still, I think for the full year will be 30 plus growth. And yes, we have actually taken a strategy to shift our product segmentation portfolio to slightly higher and going for the higher, better contribution products. So even in the pick and carry cane also, I think we're moving to the safer crates, which is a better value add as far as the business is concerned, rather than focusing on the low and high crates. So that strategy is paying off, which is we've seen happening in the numbers. And we've given a guidance of 4 to 1 EBIT margin this year for construction business, and we think we should be in line with that.
Okay, so 4 to 5% EBIT margins. But just coming back to the tractor business, because, the street is a bit concerned there. The stock is down 5%. You said that growth for you will slow down in Q4 to about 10% or so. What kind of margin deterioration do you see? Currently, you're at 12% level. Because of higher raw material costs and, an adverse product mix, how much are we looking at single-digit margins as well?
No, I think margin-wise, we don't think there will be an issue. I think across all 3 segments are doing well now. So input construction is supposed to deliver the best performance in Q4, so the numbers are the maximum in Q4. And tractor side also, I think if you look at even the last year in Q4, we had the best margin, so we don't expect there will be any issue even on a high base which are ending. So I think at 12% plus, I think is about to happen. So we don't expect any concern. And our guidance for full year again was, I think, 100 basis point improvement in margin, which we are still targeting at, and we expect, I think, by the end of Q4, we should be able to be there.
Okay. Sir, just one final question then, because a lot of people believe after 4 years of an upcycle in the tractor industry, we are perhaps headed for a structural slowdown. You don't think that's the case? It's just a 1-2 quarter blip?
No, so like you said, so we're not really given any guidance for the next full year as of now, because we think the first quarter definitely will do well. So I think the next 6 months look well. After that, I think by end of March or mid of March, once we get the first guidance in monsoon, we'll know better whether this El Nino impact will not stay down, how the distribution happens in the rainfall. So H2 really guidance, which is strong, will depend on how the monsoon pans out, and then obviously in between we got election. So not really given any outlook for the full year, but I think till first quarter we definitely see the growth continuing in the tractor industry.
Okay. Well, that's good to hear. Bharat Madan, pleasure speaking with you. Thank you very much for giving us some color of both your Q3 numbers and the next couple of quarters. We have to take a break. On that note, take stock of more earnings that came out over the last 24 hours. Stay right there.